Starting now.
What's good, guys? We've got an awesome live stream packed with actionable trading data. We're going to dig deep into this trading journal so there's no back testing. That's something that all of these entertaining crypto channels will use over and over again. Look at how accurate it is when we back test this method. In today's video, we're bringing up every element influencing Kaspa's price action specifically. This will also, in different potencies, affect the top 100 altcoin market. We've got the government shutdown. We've got the Morgan Stanley regulation. We've got the Bank of Japan rate hike. Guess when Japan's planning on hiking their rates? For anybody who's been watching the live streams normally, you've probably heard the word April thrown around quite a bit. Guess what? Japan is planning to hike their rates in April. For Kaspa, this has been the apocalypse. Scrolling over to a different chart where we have this highlighted out. Every time the Bank of Japan has hiked their rates, it's been the apex top for Kaspa, detrimental to the entire altcoin market. And then we start to get into inflation, which is going to bring us up into recent FOMC minutes. Here's the secret sauce of today's video. As we scroll through all of these, some of them, they're locked in. We know who, when, and where this is going to happen. Others, they're kind of in the air. Tariff inflation, normal inflation. When are they going to release the Clarity Act? Some of these aren't locked in yet. A beat. The secret sauce is that we can make callouts, and we're going to prove this theory building up into where we're at right now, specifically for Kaspa. Yes, that applies to the general altcoins as well. Where we're at right now, what's been the highest impacting events across price action, and every single one of them can be found inside an FOMC document. That's how we've been able to make these Chad level callouts throughout 2024, 2025, while the rest of the strategies and tactics that we're seeing, particularly on social media, they're not there. They are not holding up the mustard. Fast forward to right now. So as we prove the importance of these keywords, we fast forward to what's happening right now. And the Fed is warning us. Mind you, this phrase isn't coming from crypto banter. It's not coming from some YouTube channel with 100,000 subscribers. It's coming from the central bank themselves. And they're saying April dropping quickly and sharply. Reserves is what they're speaking on. Now, one of the issues that took place during the government shutdown was there was an issue with the reserves. Scrolling back to October 8th, right before the massive crash started in all of altcoins, 48 hours before, they released an FOMC minutes. Very similar to what this one said about how they're projecting reserves are going to crash rapidly and quickly. They said inside the minutes, Reserves fell sharply on September 15th. Now, this document that we're looking at right here, that was released on October 8th. Inside our trading group, we're able to acknowledge, hey, there's an issue with reserves and liquidity. This could end up becoming downside in crypto in the near future. And they're saying, look out, because in April, this reserve crisis is going to happen again. Now, what's taking place here? The Treasury General account that's run by Scott Bessant. He'll get a massive injection of capital from all the banks. It'll be our tax dollars in the hand of the White House, and then they'll flush it into the economy. Scott Bessant, major crypto supporter. The last time he did this, April 9th, the drawdown, boom, we saw upside in altcoins. So looking forward, part of this thesis, when's the bottom going to be in? Putting together everything that we can acknowledge is rock hard, concrete evidence. We see TGA drawdowns in April. That's going to happen. And we just went over, yeah, man, that happened on October 8th in that document. They said, look out, because on September 15th, and that's what was the first top in this double top. It was, look out, Treasury General account. They just took a ton of liquidity out of the banking system. This affects the FX market, and this affects crypto. The market makers, they need USD to back everything, creates a double top, and that's when Morgan Stanley came in and they said, guess what? We just read the FOMC minutes. We might as well have been in Jesse AI's VIP group. We know liquidity's thin, and we're going to smash crypto right now. And they came up with that Morgan Stanley regulation, emphasizing that double bottom, just totally smashing it. Okay? Part two is the Bank of Japan carry trade. This is also in April. These are things that we have on lockdown. Now, Japan might not hike rates, but they're planning on it right now in April. So meanwhile, there's going to be a liquidity crisis in the United States. There's going to be a liquidity crisis in Japan. That is going to be one of these overnight catastrophic, crypto's over. It was a nice dream, but it never caught on. And then it's going to rebound back up as Scott Bessant injects liquidity back into the market. And we'll start to move into more forward and uprising issues. Are there any questions regarding Bank of Japan or the TGA refills? And we can see right now, looking at the Kaspa chart specifically and looking at the total 3 chart, this shows the Fed's stockpile of bonds. Everybody in entertaining crypto, they're always like, we're looking at the M2 chart. By the time it shows up on the M2, you are too late. Sorry, buddy, that's old news. It starts in the bonds. When the yields of the bonds are paying big money, institutional investors are going to pig pile into those bonds. When the Fed cuts rates, that's supposed to help lower these yields, forcing all the money that BlackRock has into the risk-on sector. And we can map this almost to a T on when the bull run starts, when liquidity picks up. So right now, see this ski jump starting to ramp up. Kaspa's original rally, there was a banking crisis similar to this. The Fed used a different solution. They actually unlocked long-term bonds. What's good, Free Breaker? This guy's got awesome insight. Someone pointed out, thanks to all the viewers at home, the Bank of Japan carry trade. That shows we've got a think tank here on this channel. We've been crushing all the Peach Fuzz Mafia. It's hard to find a grown man and a group of grown men that want to research crypto. I heard Archie Type is now back in. These guys were pig piling onto Kaspa, and their groups all crashed out and pig piled onto ours. We had the biggest group on Patreon in 2024, 2025 from all these kids crashing out. Their styles don't work. This style, as we're showing you, reading these documents, is what works. Okay. Here comes when's the upside. So we've figured out now, boom. We know when the absolute low is going to hit. What we need to find out now is, when is the upside going to start? And this is still up in the air. It's not set in stone quite. A dice isn't a really good emoji. It should really be a hand of blackjack, because you can kind of count cards. You can estimate when they're going to get ready to cut rates based on the incoming data. But to simplify it, it's tariff inflation. Now, we can see inside the Fed's recent document, they are very concerned about inflation, and this is going to tie directly into when Kaspa can pass 12 cents. Inside the FOMC minutes on inflation, we've taken out every quote the Fed has regarding inflation policy. May 15th, Powell comes out and he decides, this is a real-time call out from May 15th. Powell says, we've got problems. Inflation from tariffs is way too high. We might have to change our entire policy around inflation. And this, super bearish. We dumped our entire bag, waited for it to dip down here correctly at the day of the speech. Kaspa had massive downside, very connected with liquidity. This is across every major altcoin, give or take. Tau, May 15th, it's got this hard resistance right here. It's not until the Fed solves for their tariff-based inflation, which is CPI, headline PCE. By the way, I know a lot of this terminology isn't popular, but it's gaining traction. Recently, we've been seeing No BS Crypto, House of Crypto, even Crypto Banter. They're saying, we hired on a macro specialist after we 360 dunked on them over and over again, getting out of the way, building this thesis for forward projection. So the first piece that we need to disinflate on an economic scale, CPI, headline PCE, once those levels start coming down, according to the central bank, they're saying, with the effect of higher tariffs on inflation, the wane will start in the middle of this year. So what the Fed's saying there is, by this summer, so we've got April, super crash out rock bottom because of the Treasury General refill, because of the Bank of Japan. And then by this summer, they'll have destroyed the tariff-based inflation. And this tariff-based inflation goes all the way back. You guys got to remember the 2024 market top. Look at what was in the FOMC document from December 18th. Inside this document, it reads, U.S. elections, meaning the new administration with tariffs, with Scott Bessent. He worked with George Soros to crash central banks around the world. He's now on our team, which is epic. Scott Bessent in the house. He just did a music video with Nicki Minaj. WTF. Anyway, U.S. elections. This comes out on December 18th. We captured this in real time. And it has everything to do with our forward projections. For anyone who missed this, this is actionable trading advice. This is the program, the system that you need to add to your technical analysis, to your on-chain vetting, everything. These guys control the market. U.S. elections, as investors assessed the implication of incoming inflation data. And we're talking, this is from here. Inside our VIP group, this is December 19th. You see that? This is what we're planning in VIP using this system that's building a model that's going to show us April. And for everyone who's missing parts of this puzzle piece, we're putting together a full course. And of course, we always have the best prices online. We want every investor of every different economic class to be able to join and learn something. This is it, right? We're going to change our lives with crypto. Oh, here we go, tariffs. The incoming administration plans tariffs. This is going to push inflation higher, plus, and this is back in December. This is proving without back testing, this method I'm showing you guys is gonna work. So smash the like button. Meanwhile, the Bank of Japan's rate hike is already set up for January, and that's December 19th. So we're waiting for January 28th. Here's January 27th. It all goes down just like we were planning. Jerome Powell steps up, he does his meeting, and he goes, oh yeah, the new administration's gonna raise inflation through tariffs. Meanwhile, every single master video editor, every single member of the Peach Fuzz Mafia, they're like, load it up, we're good to go. We're like, dump it, and we've been planning to dump it for 45 days. The best mind frame, like we're fly fishing 15 casts, or if you got a bobber, it's like 20 minutes. The best mind frame, think of 45-minute time windows. That's one FOMC meeting to the other, okay? Slow your roll. You can get a really good swing trade every 90 days. Takes about 2 of those revolutions. So from December 19th, we planned on dumping it on January 27th, and we do. We dump it. Here's a post about Kaspa. We're dumping all of our Moonwell, which was one of our big swing trades from the rate cuts. It was a top swing trade. And we did that by connecting what they were saying in the FOMC minutes. They give us clues what sector's going to run, and we'll show you that with Zebek in a second, and what's happening live right now. So we're getting out, and we're actually planning on holding until there's a massive sell-off. We're planning on holding for like 120 days in this document. We're pretty sure this high inflation is going to wreck the market. So we're going to be sitting on our hands right here, 100 to 120 days. And it's all in the FOMC minutes, guys. They gave it to us. They gave it to us in writing, right? Nobody's using this. This is the way to go, in my opinion, based on these results. Okay, so check. And this is all happening again. It's all happening again. We have to deal with the tariff inflation, which is setting that monster resistance at 12 cents, specifically for Kaspa, but it's for Tau, it's for a bunch of other altcoins. Any chart you can see, especially when they tried to surpass May 15th, they tried to pass it, they never got over it. It's because of this. All because of a surprise speech that Powell gave. So the April downside from the Bank of Japan, from the Treasury General account refilling, and then in order for us to get upside here, we need to defeat first our tariff-based inflation. Now, along the way, to help us specifically with Kaspa, we'll get on-chain upgrades. Based on studies, this will happen in tune with a major event. Once tariff starts to come down, something along those lines, they're going to finally do a rate cut. This will release. And we've seen that historically with Kasplex. Although because of the Bank of Japan liquidity crisis, we always projected that the Kasplex launch back in September was going to crash the market. And it was that helped us disprove all of the Peach Fuzz Mafia projecting Kaspa was going to come down here using this method. So April. Okay, on-chain upgrades, Clarity Act, normal inflation will lead to quantitative easing. They just released this inside the FOMC minutes right now. Here's what they're saying. And normal QE is what we're looking at with this blue line. If you want to add this to your chart, it's WALCL. It's the Fed's balance sheet. It's this chart, which every trader wants to have. I'll leave you guys a link to it. This is the central bank's bond market. This is front-running M2. Anytime you hear somebody talking about how they're tracking M2, they're goofy. That's too late. You're too late. First, it comes from here when the Fed does their policy change to release money from here. And these are your long-term bonds, your big bonds. 10-year, 5-year, 3-year, 2-year. Let's see if we can zoom in on this. This is what pumps your store of value assets like Kaspa. These long-term bonds, 10-year, 5-year, 2-year. And we can see it right on this line. So notice now it's starting to perk up a little bit. The Fed's doing some mortgage-backed security, quantitative easing, and they're doing some treasury bills, some really short-term bonds. There's a little bit of 52-week treasury bills, which is causing this ski jump. In order to get that bull run that we are all looking for, that, oh, we finally got paid similar to lockdowns, that type of macroeconomic environment only happens every 12 years. It's a 12-year storm. What we're looking at here is the central bank's game plan. It's the global liquidity cycle. This is how they run their fiat Ponzi scheme. The red line is their plan. They're going to inject capital into the economy to stimulate growth, and then they're going to fight inflation, which they've worked directly into this entire plan since the 70s. They're going to withdraw that by building their balance sheet and hiking rates. Now, all the boomers, they got to experience this black line. So this red line is the 4-year cycle. Satoshi built Bitcoin around the Fed's battle plan. What else has a 4-year cycle? The Bitcoin halving. But it's in fact the Fed cycle that really gets the liquidity flowing. Once every 12 years, we get the perfect storm. The Clinton administration, this black line shows what actually happened. And you can see the economy never really went down. There was tons of liquidity for a decade. And just recently, we had a terrible bull run. Looking at the total 3 chart, they've been doing quantitative tightening the majority of this time and just halting quantitative tightening recently. That's not an epic bull run at all. A beat. They are building up into it. For right now, that's what tariffs are all about. They're going to stimulate growth. So into 2030, Kaspa completely skyrocketing. And right now, everybody wants gains now. What's going to happen now? It's all about CPI, headline PCE, beating that, and then we'll be able to cross that tariff inflation at 12 cents. They're projecting this is going to take place in the summer. Inflation is expected to wane starting in the middle of this year. First, it's tariff inflation, which is what they're talking about here. And then it's the big boy inflation, which is going to unlock the treasure trove of wealth right here. This line, this blue line representing the Fed's balance sheet, will finally start to rip to the upside. And that is when everyone gets those gains that we've been waiting for this entire time. Those legendary gains. Super awesome stuff. So, from the top, for everyone who just joined up, my thesis, and I'm selling a duplex that I own to get a bag of cash. This is already a listed property. I'm waiting for it, hoping that it comes in before April. I'm going to take that capital and roll it into Kaspa and Bitcoin position at this low. Remember back in elementary school when they showed us all you have to do is save $1,000 at a 5% compound interest, and in 10 years, you'll be a millionaire. This is exactly what BlackRock and all these guys are doing in these government bond markets. Of course, they have hundreds of millions of dollars in here. And as long as the rates are paying big, that's when they stack in here. As the rates start to lower, that's when they start to go for risk on assets. particularly with Kaspa, because this is a project that we know is going to be around cycle after cycle. All the FUDsters have a great point, and it's actually super bullish. Yeah, Kaspa doesn't even do anything yet. Wait until it does. Wait until they have smart contracts. Wait until it's fully up and running. We've been holding strong in the top 100. You could even argue, knowing all this stuff that we broke down in this video, every detail from these FOMC documents, you could argue Kaspa front ran the crash because it's so heavily invested by the institutional sector because of the Marathon Digital Mining, because BlackRock owns Marathon Digital. You could definitely argue that they know so much. They read these FOMC documents so well. They understand the economy so well that they front ran the altcoin crash. That's why Kaspa was showing weakness in price earlier than the rest of the market. By using your Kaspa holdings like that savings account they taught us in school, where you're getting it at 5% interest and in 10 years it finally explodes. With crypto, yeah, you're going to see a lot more ups and downs. But eventually, in 2030, when this black line actually goes according to plan and gets way up high like it did with the boomers under the Clinton administration, this is how Satoshi built Bitcoin. This is a 4-year cycle by the central bank. Goes hand in foot with Satoshi's master plan. When they finally get the economy filled with liquidity, boom, you get your monster payday with Kaspa. Now, in the meantime, everybody wants to swing trade a side bag. They have some projects that they believe can do well. So they've got, perhaps in your Kaspa portfolio, you also want Tau, you want Aerodrome, and then you're saving, 10, 25% for some low caps that you believe will have a strong standing for this cycle and the next. I'm going to show you guys a tip using this exact same procedure that we just went over, going into these FOMC documents. This isn't a back test. This is showing you in real time. So back on February 18th, we were the first trading group that ever mentioned Zebek. And we did it because of the keyword tariff was so embedded in all of these FOMC documents. So right here, with the US election, now the new White House is here. They were panicking because of tariffs. This is the reason why we're able to get out in front of this crash. This is December 9th. Meanwhile, the Bank of Japan plus tariffs right here. This is January 27th. We've been planning it for 45 days, just like a fisherman. There's like a 45-day window. That's like one cast in fly fishing every 45 days. We've been planning. This whole thing's going to rug pull. It's all going to rug pull, not because of what crypto banter said, not because of some 21-year-old kid on the internet. We did it because this is what Jerome Powell said. This is what they said in an official, really nerdy, really like an accountant / lawyer document. These things are really tough to read. I'll drop this PDF in the comments. You guys can take a look for yourself and see. Had you got a second chance to read this document, would you have been able to have recognized the market was going to crash? And of course, using all these actual callouts, no back testing, these were the Chad callouts of this last cycle, hands down. We only have 10,000 subscribers, but we had a top 100 largest Patreon group. That's why all these other channels suddenly started saying, we're hiring a macro investor because we cracked it. We cracked it doing this. And we have a full course to just get you from 0 to 60 coming out, all real call outs, no back test. So right there, that's where tariff trouble started. And it's in multiple FOMC documents. So what's Zebek do? Zebek handles supply chain management. It's like a #1 project that can rock and roll with tariffs. So we saw a little bit of upside here at the end of February. Inside our Discord, group members were crunching the numbers. We knew we had 120 days sitting on our hands until this action was going to start. They put together something. They've really crunched down the 3 possible tariff-connected projects, and they came up with Zebek. These guys caught a rip to the upside, and ever since then, everybody's been talking about this project. So that's just one example of how we're connecting this FOMC documents over to actual swing trade plans. What was in the most recent FOMC minutes? They're talking about artificial intelligence nonstop. It's a huge part of the United States economy right now. In the event the artificial intelligence sector takes a dip to the downside, we're talking stocks as well. It can be bad for the entire US economy. So one project, people think, okay, instantly they make the connection to virtuals. Virtuals already had an enormous growth spout. We were able to put together real-time trading plans for BankerBot. We saw it had a good reaction to the FOMC minutes at the durable goods. Durable goods is automation and robotics. Now, just a few days ago, we had another FOMC minutes and another durable goods. Here's the issue. Through our card counting, we are able to project, when these prints come out, they're not going to be bearish at least. It'll either be neutral to bullish. Yet when the actual data was released, it came out neutral. So the jobs report was bullish. The CPI, that's the tariff inflation that the Fed's been talking about, that's one of the #1 metrics that's going to get Kaspa specifically above its May 15th trend line right here. That's basically the CPI trend line. We could also call it that. That came in bullish. That was low. We need to see a continuing trend of that. The durable goods came out, and it was neutral, and it was a weird neutral. One of them showed massive growth, and the other one showed crisis mode. So they canceled each other out, and they really gave indirection. The FOMC minutes was deliberately neutral. PCE actually came out bearish. PCE showed high inflation on Friday. Now, at the Sunday DXY, normally, if PCE is coming out high, we're thinking, look out, it could crash, but we were lucky enough to get a rogue data print. Check this out. This is really high level stuff. The GDP. So we normally don't track GDP. We'll track FOMC meetings, FOMC minutes, all the inflation, all the labor data. Here's the catch. Inside the recent FOMC minutes, this is what the Fed said about GDP. The staff projects the economy will show growth inside the GDP. Surprise, it actually crashed. This is putting Powell on edge. In the event inflation comes in high and GDP crashes, Powell's going to have stagflation. And he will have to cut rates, inject more liquidity. Powell will do anything in his power to stop stagflation from becoming. Now, this is an early warning sign. It could have been because of the government shutdown. That could have temporarily affected GDP, but that's canceling out the bearish PCE print that we got. We'll know how the market's digesting this on Sunday's open. The most crucial time to be at your trading terminal, hands down, gives you the most administration, has the most action, and this is proven. We pulled up a document in yesterday's live stream showing Monday is the most volatile and the most bullish day of the week. This is Sunday at 3 p.m. So we had a high inflation print right here on Friday. The weekend goes by, nothing major happened. Sunday happens, and we get a cliff drop in altcoins. Here's another Sunday. Sunday happens, cliff drop in altcoins. You can also catch breakouts to the upside, and it gives us insight into what the institutional level investors are buying. I've seen these channels with like 100,000 subscribers, and they're like, we're going to track Alex Becker and all the whales. That seems like a ridiculous style to me when it's way more easy, far more accurate to track what the institutional level traders are doing, to track the market makers themselves. All right, awesome questions here. Let's jump into these. Kaspa hoodie, this is old school. Do your own research. But we've just put together a solid theory. Let me show you something before you go ahead and buy, particularly Bitcoin or a top 100 asset. Let me show you something that was just released to the entire trading public, just so you fully grasp the magnitude here. Reserves will increase until April before they drop quickly and sharply. So what do reserves have to do with crypto? Basically everything. Rewinding back to October 8th. This is 48 hours before the crash. Morgan Stanley 1-2 punched with this, tanked the crypto market with their regulation. Here's what happened 48 hours before that. Reserves fell sharply on September 15th. Zooming into September 15th, we can see this September 15th right here. We get an altcoin double top, right? The Treasury General account. That's why the reserves fell on September 15th. That's Scott Bessant's pile of bonds. That's how he injects liquidity into the market. But first, he has to extract capital from the banking system, and it stresses the market, and that affects crypto. Crypto's hypersensitive to banking reserve levels. It's another form or another way to look at quantitative easing, but more in the repo markets. If any of this terminology, you're missing a puzzle piece, we've got the full course going, everything coming out, and it's going to be priced super fair. We don't make extraordinary huge ticket prices. We price everything low and more people buy. How old school is that? So the reserves fell massively on September 15th in response to the TGA. Now look at what just happened. Reserves are about to fall massively because of the TGA. So they're telling you what just happened is going to happen again. Plus, and here specifically for Kaspa, the Bank of Japan carry trade. This has been the absolute peak on Kaspa until the Bank of Japan hiked their rates. They also hiked their rates here. Now, from understanding that there was going to be a rate hike, we anticipated this on December 19th, just proving this model, this isn't a back test. We've already made money doing this. We've already beat the market. We already woke up a ton of channels on social media. Now they're like, oh, we hired a macro expert because that one group totally 360 dunked on us because they actually read their white papers. Here we go again. Here we saying it's happening. Look out. Just like we planned on December 19th, the Bank of Japan hiked rates. Okay. So every time the Bank of Japan does that, it's a crash. We've anticipated it, gotten out of the way. This time we're getting ready to scoop up. How will the Japan rate hike impact crypto markets in April? Okay, and I'll leave this article for you guys to review. So that's the brief on April. Here's the other factor. When we're not going up, we're going down, and we're having some inflation difficulty right now. Excellent question, Eddie. Thanks for chipping in. So with some things like Japan hiking rates, like the Treasury General Account refill, we've got a lock, okay? We know when that's going to happen. That's good. Other things are still dice in the air. So we can create a sliding scale depending on the outcome. This is a huge factor for inside our VIP group. Whenever the data is coming in, no one can predict the data. You can kind of card counting anticipate what it's going to be, but you want to be ready for a range of results. So here's the breakdown on price scales for Kaspa, just giving you a big range, okay? Let's say we can get CPI, which is tariff-based inflation, and also headline PCE. Let's say that we can get those levels down quicker. This will in turn allow the Fed to stimulate markets more. They'll be comfortable with rate cuts, quantitative easing. Institutional investors will want to front run future policy stimulation, knowing how the fiat bank works. When there's more liquidity, boom, it's more bullish for crypto assets, indefinitely stores of value like Kaspa. Look at this one time they did a ski jump injection with quantitative easing. Kaspa was like the #1 project then. We were able to put together a theory way back then. Hey, these big dogs, the market makers, they must be interested in Kaspa. We didn't find out until here. They'd been mining it the entire time, and undoubtedly was them buying it there. So we were able to wait for a pull down. That's an FOMC meeting. We bought there, and the rest is history. So we want to beat this inflation level, May 15th. Now, in real time, just again, to prove you that this isn't a back test, in real time, on May 15th, we realized because Powell's coming out, this is because of tariffs. This is all tariff inflation. He's saying, dude, inflation's way too high. This is bad news. We recognize there's going to be downside. We sell our Kaspa, waiting for pullback. We buy back in on the low. We get some more upside. Here was another inflation data print, and it rejected right on this line. Not just Kaspa. This is a ton of different top 100 altcoins. You'll see there's May 15th on BitSensor. Rejects here, gets a wick above, but ultimately rejects here. So in order for Kaspa to be warranted, to be supported fundamentally, to surpass the 15-cent inflation line, CPI headline PCE has to come down. And if you want to know the difference between the two, we've got the full course going out, make you an expert. And when you're sitting with your uncle who's like a big time stock guy, and he's like, how are your meme coins doing? Like kind of teasing you, you will be able to hold a conversation with him. You'll be able to raise the bar on him because you've read every FOMC minutes. You know every terminology. That alone to me is something of value. We have a trading group in this luxury tower with rich dudes that trade hedge funds. One guy built the original ASIC for Bitcoin, owns an exchange overseas. And of course, we can hold a conversation with these guys. A lot of crypto investors can't. That's why we're kind of the joke of the investment world. So first we have to handle that. And now the Fed is planning or projecting, I should say, that this will be handled by summer. So we've got the April crash from TGA drawdowns and the Japan hike. That'll create the ultimate low. That's pretty much a lock. And then kind of the dice are in the air, or we can count cards and assume that tariff-based inflation, which is different than normal inflation, will start to cool down. And then as this happens, my opinion is they'll start to unleash the additional bonuses. And we have studies kind of proving that they do that. And after that, we get into the big quantitative easing unlocks. They start fighting normal inflation, which is when this blue line goes up. That's Zebek, but you still get the picture of it. Once that blue line starts to go up, that's when it's on. That's when the Fed is flooding liquidity. And remember, this is a plan by the central bank. They've been doing this since 1970. The rich get richer, the poor get poorer. We're digging in here. We're fighting against this. We've got the whole map plan out. It was actually a viewer who was able to contribute and remind us, hey, the Bank of Japan's planning on hiking rates. You might want to throw this into your theory because we originally just had the Treasury General drawdown dropping quickly and sharply. Okay, this isn't some altcoin daily opinion. This is the central bank. Bullseye. Once they handle regular inflation, then the dream rally that the White House is talking about, that'll start to rock and roll. And they'll be able to get this black line to rock up. The red line's just the plan. Like Mike Tyson always said, everybody's got a plan until they get punched in the face. This last bull run was terrible. The entire time they were doing quantitative tightening. That's not a bull run. Just wait until they start rocking it upside. That's why in this course, we're going to be emphasizing this is like a bank account, like they taught us back in elementary school, where you're getting your 5% return, compound interest. But this with crypto will have such a dynamic upside, it'll explode. And by tracking this FOMC insight, we'll understand when to buy, when downsides are coming in, and we'll maximize our savings, right? Putting together plans like this. Instead of buying at 3, let's wait. Let's see if we can get a flash crash in April. See what's going on then. Good question. I'm going to definitely go heavier into Kaspa than Bitcoin. Definitely heavier into Kaspa than Bitcoin. And I like to keep 10 to 25% right now. Well, factoring this house in, I like to keep a bit more into swing trades with a high probability of upside. I'd say I go 25 to 35 into my swing trade active portfolio. And of course, you've got to keep some open positions just to stay active, just to stay in the game. I have a huge position in Clanker for side bags. This is one of my top side bags. I believe Clanker, listed on Coinbase, had a smart contract audit. Remember, artificial intelligence was inside these recent FOMC documents. Scrolling up to page 1, they keep talking about artificial intelligence over and over again. See right here, artificial intelligence. That was in the December 30th FOMC minutes. Therefore, my thesis, Clanker, which can do on-chain automation, is a good side bag to have. I have another one that's more in line with the Genius Act. So just like Kaspa with these, it's a savings account. You can throw in, add to it as you go. Plus, we're keeping even smaller positions where we're kind of day trading, actively trading projects like River, projects that we're assuming are going to break out, Quack AI, BankerBot. It would have been awesome to have a huge position in BankerBot or to have had a huge position in River, which did a 30x, but I only had, $1,000, $2,000 in these. Keeps you active and it kind of grows, keeps going, gives you some additional capital to throw into your cash holdings and your 50x, 100x prospects. Keeping a cash balance also important, but we'll get into all that in the course. I believe that you're referring to the breakout that we were projecting because of FOMC minutes and durable goods entry. Is that correct? I'm just going to assume that you are, because we're talking about the 2026 altcoin season. This entire video, we were projecting that there was going to be a bear market rally, similar to what we saw at the FOMC minutes on December 30th, because both of these events, durable goods, which has to do with robotics and AI, and the FOMC minutes, these all just happened again. Bada boom, bada bang over here. But so we were kind of counting cards with that, saying, hey, these really can't be that bearish. Therefore, we think they're going to be bullish. But what actually came in was very neutral and slightly bearish data. So that hypothesis that we were going to get a breakout went downhill. So this is what we've been looking at. This is what helped us put together our card counting for how this is going to go down. The jobs report came in bullish. The CPI came in bullish, which is that tariff-based inflation. So we're looking at an upcoming durable goods and an upcoming FOMC minutes. Now, previously, those were both green light. Those were very bullish. Plus, they separated PPI and CPI, which is weird. Those are always released in tandem together. Since they're making such a difference between tariff inflation and normal inflation, they're separating the two. All those details we'll have in the course, so you'll be able to put together this spider work of understanding on your own in written form and in video. So we were like, durable, it's not going to be bearish at least. Here's what happened. Durable goods come in neutral. There was two key data points. One came in showing massive growth. The other, crisis level downside. So the institutional investors can't front run on that because it's a mixed signal. So that got nullified. Push forward to the FOMC minutes. This FOMC minutes came out very neutral. All they said was, we're very concerned about inflation. And that gets back to this whole tariff CPI. So PCE comes out on Friday and it's not yellow. In fact, the PCE was red. It came out high inflation. So that was immediately bearish, but we got a saving grace. Inside the minutes, the Fed said this: the staff projected the economy to show real GDP growth. This is major. This is a quarterly print, right? So it comes out and it's actually super low, 1.4. The previous one was 4.4. The consensus, or what the economists are anticipating, came in at 3. So there was a huge surprise beat, which is creating stagflation. The number one thing Jerome Powell does not want is high inflation and low GDP growth. So we were projecting there was going to be some bullish data here, and guess what? The only thing bullish we got was that rogue GDP. So here's the next piece of insight we can get. It's that Sunday, and we'll be live streaming for this. It's that Sunday reopening of the DXY, the most important trading time frame of any day is Sunday at 3 p.m. Vegas time. This is when the DXY market reopens. You can see the altcoin market dropped off a cliff right there because there was a bearish PPI. So there's a good chance that on Sunday, because we had high inflation on Friday, the entire altcoin market's going to drop off a cliff. It all depends on whether the institutional investors are going to consider that GDP something that Powell's going to have to front run. So we'll be watching on Sunday to see what goes down. Now, there's a huge print coming up on Friday with PPI. It's been showing high inflation over and over again. That's what's been causing, this is PPI, drop off. This is PPI, drop off. So there's a PPI on this coming Friday. They're actually anticipating it to come in lower. So if we can get lower PPI, that'll be awesome. There's a possibility it could also be neutral. There could be a lot of chop, neutral activity, and then PPI will know more. That'll be the defining event. Let's take a look at this altcoin. Oh yeah, part of Maple. Okay, some things that this does line up with well. Let's zoom out here. It actually creates a real yield. This is going to be a huge defining factor of the entire 2026 altcoin cycle, that Morgan Stanley regulation. Meanwhile, while us nerds were reading the FOMC minutes, right, and they were talking about the September 15th massive decrease in liquidity, we were saying, uh-oh, there could be some downside in altcoins coming up. Morgan Stanley was waiting to do a 1-2 punch combo. Here's the Treasury General Account refill right here. Creates a dip downside. It's a double top with the FOMC minutes. And then Morgan Stanley says it's only cryptos that can actually do something. Creates massive downside. That's why these meme coins are bleeding out. There's not going to be any more meme coin ETFs. That's not happening. So any project that has a real world use case, their value just went up. Looking back here on recent, I'm trying to connect this with recent macroeconomic dates. It kind of front ran the FOMC minutes on December 30th, had a nice jump to the upside there. And then, yeah, PPI has been absolutely crashing this down. So in the event Friday's PPI comes in bullish, it'll start to reverse that effect. It's kind of the macro hybrid strategy, just like with this May 15th resistance line, that major 12-cent resistance on Kaspa. We can also see it on Tau. For those of us who only use technical analysis, we're only getting half the puzzle there. Everyone can see that trend line. But when you understand the macros that are fueling that trend line, now we get even more insight on it. Now we can trade it even more effectively. So with your syrup, I'd be watching for PPI this Friday. Look for a surprise beat because a lot of this downside I can see is directly connected with PPI there. Moonwell was a top swing trade during the 2024 rate cut. Inside these trading plans we were talking about, we're selling our Moonwell because they stopped the rate cuts. Where is that? Either way. So we were able to both get into Moonwell because of the rate cuts and get out of Moonwell because of the Fed's pivot inside the FOMC document. Let's take a look at the chart. Oh yeah, we've retraced all the way back down. Let's look at its local connection with macroeconomic events. Very, very minute upside. This has been really in a tough spot. Let's see. Well, we're back at this resistance. Moonwell, very, very much like syrup, actually makes capital. It is, at the same time, part of the crypto self-licking ice cream cone. It's DeFi. It very much works within the crypto sphere. This isn't just a regular Wall Street business that's using blockchain technology to enhance itself. so it doesn't get any bonuses from the MSI regulation. I would keep an eye on this one. It has a deep connection with liquidity. This could also find a bottom in April because of its liquidity connection. Remember, it was the top swing trade of the 2024 rate cut. We were able to get our group members in super low and then out while it was still high. Connected to liquidity. Definitely, I'd wait on this for April. And yeah, I'd say possible, you're looking for a lot of upside here. Yeah, it's a possible return to all-time highs. Absolutely. Just like that savings account they taught us in school. Continue to DCA. We can use our macro insight to time it. We'll get more bang for our buck. And just think of it like that lesson they taught us in school. Just keep saving at a 5% return and you'll be a millionaire eventually. Your crypto account, very similar to that. Satoshi designed it to get us right in with the rich guys. We'll just get maximum return, but we're also getting maximum volatility. In the event we're reading these FOMC minutes, we have a deep understanding of macroeconomics. We don't use the M2. We actually use the bond charts. Then and only then do we have a chance to make super Chad call outs like all the ones that we broke down, backing up our thesis where we were projecting 45 days in advance, massive crash here, another downside. Plus we're setting up that May 15th level. We actually bounced off that here in January. Jeff says, so in the event Kaspa breaks 12 cents, that May level, with all its upgrades and favorable macros, where is it going to go? This is directly connected with, in part, how much on-chain upgrades and dynamics they can get. The KII, we've all heard of them. They run an entire stock market in Europe with energy trading. Connecting Kaspa with that would be huge. The VPROGs, which is a smart contract that will allow Kaspa to hook up to any data center, any warehouse. That could be big for artificial intelligence. One part of that, and this is, Jeff, where the dice are in the air, but to go deeper down that rabbit hole, we can also count cards here. We can stay on top of the on-chain upgrades. How are these smart contracts through VPROGs coming along? How's the KII development going? In tune with, and something we specialize in that nobody else covers correctly, is macroeconomics. What the Fed is saying directly in their documents is after we defeat CPI and headline PCE, which is the May 15th resistance, in order for them to start really getting this ski ramp to go up, right here, there was actually another banking crisis, Jeff. They shut down Circle Bank in California. They were afraid there was going to be a bank run, right, because of all the money printing they did for COVID. So the Fed decides we're going to do quantitative easing of long-term bonds because Kaspa is a store of value, because behind the curtain, there was all this on-chain development with Marathon Digital building Kaspa mining warehouses, BlackRock taking interest in it. Kaspa was the top performing altcoin for that liquidity injection. It's because of that Kaspa went on our radar. Because it was such a big runner, there were some usual suspects, some meme coin traders, Crypto Galaxy, some other guys were covering Kaspa, but we had a different thesis for why it was going to be so awesome, very interwoven with macros. So what we want to watch is when the Fed's going to get ready for that life-changing liquidity injection here. The more bonds the Fed buys, let's say they can get their, this is their Fed balance sheet. When this is going up, that's bullish. The last bull run was totally lame because the Fed was selling their bonds. That's not bullish at all. That's the exact opposite. So once that flipped finally scripts, once PCE comes down, that's when the Fed's going to get the cue to start building a huge balance sheet, which will force BlackRock and the institutional investors to look for risk on assets because they're not going to be able to get a high return on bonds. And that will create what we're looking for, what this new administration, Scott Bessant's the mastermind here. He worked for George Soros. We're looking for this black line, which shows this is the central bank's master plan. They're pushing the liquidity in. They're taking it out to fight inflation. Once that black line gets up and running, the higher and longer it's held up there, the better for Kaspa. So that's kind of a card counting element that we have to factor. Can it make a new all-time high once inflation's down to 2%? What do you think, Jeff? They were doing quantitative tightening this entire time. In the event, this blue line, which shows the Fed's balance sheet, now the Fed is buying bonds off BlackRock and institutions and giving them cash. Now, BlackRock's got the cash and they need to find a long-term store of value to put it in. The last time this blue line went up, Kaspa was their choice product. This is why my entire thesis has been centered around Kaspa, and this still plays out going into this up-and-coming, hopefully legendary cycle that they're projecting 2028 is when inflation's going to be down. PCE inflation. First, the tariff inflation will go this summer. That's CPI and headline PCE, but other parts of inflation from the money printing they did right here, it's going to take a long time to fix. And tariffs has just slowed the process down, making their plan completely off balance. But eventually, boom, it's on. And when that happens, 2028 to 2030, Kaspa is a target in the top 100 based on this. We just went over the thesis of it. It's April, undoubtedly, based on FOMC minutes. The Treasury General account's going to refill in April. You really got to rewind and watch the start of this video. The Treasury General account refills again in April, which causes downside. We've got to... I've lost my place here in the document. I can show you on this one. Reserves fell sharply on September 15th in response to the Treasury General account. So whenever the Treasury General account gets a refill, and on this document somewhere, we can find the Treasury General account is about to refill in April, that is what we're projecting Bitcoin's going to come down. And this, from a hybrid style, the head and shoulder pattern shows a 70% retrace. This is supported by macros. We're waiting until April. I apologize. I don't have all those documents in my hand right now. Watch the first 10 minutes of this video. You'll get the full insight, including what the Fed is saying directly. I actually might have this open in another screen. Ooh, you guys are in luck. I've got it open in another screen. Here we go. Here we go. Nice. Okay. No, that's the US elections. It'll be in April. There's a multiple amount of reasons, including the Bank of Japan carry trade and so on. When to rotate from gold to Kaspa. I bought this bar of gold after taking profits when Powell said we're done with the rate cuts. Wow. Look at gold. Really starting to rally up. I would wait until April, undoubtedly, because that's when we're going to get our best rock bottom low for Kaspa. In the event we can capture that April bounce, and I'll show you the history on the Kaspa chart directly, just to see how deep it becomes. So here's the April bounce. This is the Treasury drawdown. This is when Scott Bessant collects tax money. And they just said in the minutes, it's happening in April. So when Scott Bessant takes that money, not only did he say, is it happening in April, they just said on October 8th inside the minutes, oh, that's happening on September 15th, which caused this downside, which only then increased after the October 8th minutes. So whenever the Treasury General account is pulling liquidity in, it's bearish for altcoins, it's bearish for Kaspa. That'll give us an opportunity, plus the Bank of Japan carry trade, to jump in. And that should be a broader pivot into risk on. Super low right there. Aerodrome, great project, deeply connected with macroeconomics. One of the few projects that was able to cross the May 15th resistance line. A lot of the layer ones could never get above that. Aerodrome was able to, which is pretty impressive. So here we've got the April 9th FOMC minutes support line. Just like on the Bitcoin head and shoulder chart we were looking at, Solana is another really epic example. Pulling up the Solana chart, we'll often find that there is a macroeconomic support line. Let's get some of these drawings cleaned up. There's a macroeconomic support line that we're going to bounce off of. So when Solana was at 100, we were like, stand by, this is going lower. We're going to bounce off this level right here, which is in November of 2023, guess what? An FOMC document where the Fed said, we are done hiking rates. And they actually stopped that here. Then they looked at all the data, made sure it wasn't going to wreck the economy. And then they said, nope, it's legit. It all worked out. We're going forward with this plan. So that was a super bullish moment, both here and here in those documents. Again, this macro strategy, we want to pull everything we can from these FOMC documents, from when they're going to refill the Treasury General account to what sectors the institutional investors are getting ready to swing trade. So for Aerodrome, there's a support line here from when Scott Bessant got his refill. They pull all that cash out of the banking liquidity system. It causes a downside in crypto. And they released an FOMC minutes. In this document, the Fed decided we will stop quantitative tightening in December. That's pretty good news. What we're doing here is front running the institutional investors. We see all these channels. They've got 100,000 subscribers and they're like, we're going to front run Alex Becker and like a bunch of these guys with huge Twitter accounts. It's like facepalm. What, dude? Front run the big dogs. Front run the institutional level investors, which is how we got into Kaspa in the first place, right? Because of that huge QE injection. So with Aerodrome, we found this support. Zooming in locally, we're also seeing an Adam and Eve double bottom pennant. Not a super powerful pattern. Inside our trading journal, this is often to repeat itself. So when you see this sharp crash and then a rounded bottom, it looks kind of like it's a cup and handle, but with a sharp downside. This is often going to repeat itself. So we can see we're kind of repeating at a higher cup here in a pennant formation. For it to be a true pattern, it's got to be 18 to 21 days. Anything less than that is a pennant, and it's not going to really have that price action impact we're looking at, but it can provide some insight. All the macro data that just got released, which has included a new durable goods, a new FOMC minutes. These were super bullish on BankerBot. These all just happened. Unfortunately, when the data came out this time, it came in neutral. And then on Friday, just 24 hours ago, we got bearish, although we got a GDP growth drop down. This puts Powell in panic mode. That's the only reason why the market hasn't started dropping, or in the event the market does rug Sunday at 3 p.m. exactly. We're going to do a live stream. This is when the DXY reopens. It's literally, there's studies proving this, the most action-packed time frame ever. So what the Fed had assumed inside this official document they released on Wednesday, they said, yeah, the GDP is growing. Guess what happened on Friday? Well, we got this unfortunate bearish inflation. Surprise, GDP's crashing. This could create stagflation. Powell will have to cut rates faster or start doing some long-term quantitative easing to stir up the economy, because once stagflation steps in, it's like almost impossible to get out of. It's an economic disaster. So Powell will do anything to get out of that. Now, the institutional level investors that were front running, they've got a lot of mixed data to go through. This was an action-packed week. A lot of it was neutral. Some of it was bearish. That's the only bullish factor we've got for a near-term breakout. And we'll know what's going to happen on Sunday. Now, there's another event on Friday. There's a good chance, because everything was so neutral, that we're just going to see a lot of volatility this week. And then Friday's PPI is going to be the nail in the coffin. They're projecting it's going to be bullish. The Economist anticipations. That's what they think. We'll see. And then that'll, of course, set up another Sunday. But arrow long-term for a savings account, let's say you don't want to go all in on Kaspa for your big long-term portfolio. You want to do Kaspa, SUI, Aerodrome's a fine pick. You could also do Coinbase stock. Remember, this Morgan Stanley regulation that targeted the stock market's connection to crypto. So there's a lot of arbitrage plays happening right now with stocks. MicroStrategy, Bitmine Immersion, they're massively undervalued compared to their book, compared to the crypto that they're holding. Coinbase stock, also a good alternative to Aerodrome, but they both represent the same thing. So we'll be watching Aerodrome at Sunday's live stream tomorrow to see how the market makers are digesting all of this, because it's very neutral and it could really go either way at this point. Oh yeah, the DXY tomorrow, that's where it's at. The most action-packed time, and we'll have a lot of information about that. I'll do some cut, copy, paste, comment injections for you guys, studies showing how important Sunday is, how the DXY is connected to our charts in general. When you really zoom in at the intraday, everybody's got to have noticed this, right? When you see like every bump, for example, February 18th at 1540, Bitcoin had this intraday wick to the upside. When we zoom into a completely different chart, Clanker, just for an example, it does the same spike. What's causing that? It's the DXY. All these institutional level investors, they've got automatic trading bots depending on the US dollar's valuation, which is directly correlated to their balance sheet, rate cuts, everything like that. Our entire trading strategy as abroad connected to DXY, cryptocurrency. We're ultimately currency traders here. When the DXY reopens, we'll get a huge reaction. That's what syncs everything up together. And so over the weekend, now your institutional traders have a chance to digest all the data. Everything we've been studying in detail inside our VIP group, they're analyzing it. And then they're coming up with manually adjusted positions. For example, in this FOMC minutes, they used the word artificial intelligence. Okay, at the durable goods entry, we projected there's going to be a huge breakout in these select AI projects. Durable goods came out, showed massive growth. And it's a trigger, a catalyst to the upside. Same thing with the ZEBX trading plan. We were the first people to ever mention ZEBX way back in February because we were reading about tariffs. Because of the US election, look out for tariffs. And that's all over those FOMC. So we were able to put together this. So the DXY incorporated with everything, and we're going to get a ton of information about, for one, how did the institutional level investors digest all this information that we just got? What's going to pop up? What's going to go down? That's going to show us what they're holding in their hand, what they want to run. We've used this technique in VIP to smash some awesome swing trades, and we're getting insight into sectors and long-term projects. So really important trade. It will be even better next week, the next Sunday, because it's PPI. All this data was pretty neutral. So it's going to be a choppy, high impact event. Next weekend, there's a better opportunity for the blackjack count to come out bullish or bearish, and we'll be able to make some spot on swing trades. Right now, we don't have a strong count, right? It's not favorably bullish or bearish distinctly. It's very neutral. This is a great point. Why bother with Bitcoin at all? Great point. Yeah. Kaspa's definitely on chain, the better version of Bitcoin. I think MicroStrategies will probably be a better investment than Bitcoin for this cycle. Because there's too wide of a range. For this year, well, we know we can defeat 12 cents once we handle CPI. And the Fed's already projecting, as we showed in these documents, that that's going to happen. And it's going to happen by summertime. So by summertime, they defeat CPI. Powell's getting replaced. We've got a new Fed chair stepping in. Meanwhile, in order to get long-term QE, to have Kaspa do its real dream run, we need to defeat regular inflation, which is also quoted inside the recent documents. I would say between 30 cents, creating a new all-time high, and testing 16 cents. I would say worst case scenario, we're able to defeat tariff inflation and we start working on long-term inflation. We'll get up around here. Worst case, if it starts going better, up towards 30, retesting, making a new high. But the real coup d'etat happens once they start unlocking the bonds, which they're really just not going to be ready for until 2008, 2028, 2030. Yeah, so my range would be worst case scenario, 16 to 30. 16 to 30 for sure. waiting for April. In the beginning of this video, we go over in detail all of the fundamental reasons to add on a bit to the Bank of Japan, the Treasury lockdown. Remember, the Bank of Japan's the top of Kaspa. The next time they do a Bank of Japan rate hike, here was the first one. I got them already drawn out for you. Bank of Japan, second Bank of Japan. And we were able to use this to front run sell-offs. We were able to get out of this in real time. Okay, this isn't a back test. This is like, dude, we've been 360 dunking every other strategy known to man. From reading the FOMC minutes and tracking the data, we've been saying, look out, Bank of Japan, look out, tariffs, over and over again, right? This is old school. This is like our sort of proven approach. This is why we have this hypothesis. So back to Kaspa. We've got the Treasury General Account. That's one of the things that we've been using to get out of the way in our trading plans. The Treasury General Account is going to refill everything in April. Meanwhile, the Bank of Japan is going to hike rates. So that's the macroeconomic downside. Now, looking at it from a different point of view, technical analysis, we're going to use the hybrid system here. Just like on the Solana chart, this is a flawless head and shoulder pattern inside our technical analysis journal, where we accurately have the real statistics behind all of these patterns. There's like people with 100,000 subscriber channel that say, oh yeah, this is a ascending triangle and it's a rising wedge. We have everything mapped out perfectly here. The head and shoulders, which we can see inverted, has a 70% average downside. And we can see that on Solana. We're about to roll this over into Kaspa. So we've got this 70% downside. Here we've got how the psychology of the market really forms the head and shoulders and what insight it gives us. This was locking in 70 cents, $70. So we align this with macroeconomics. That's in FOMC minutes when they had good news. Boom. This is the bottom. Bitcoin, same deal. We've got the Bitcoin head and shoulders. We're thinking there's more downside. It's going to come in April, but technically there's more downside. So Kaspa, it has an inverted cup and handle. This is super bearish. You guys have got to have noticed this, right? There's this huge, very bearish chart, which topped at the Bank of Japan carry trade. This is all connected with macroeconomics. So it's also been supported by Treasury General accounts. In order for this to mathematically bottom, it's actually 2%. That's the mathematical bottom on an inverted cup and handle on average. So therefore, because we see all the macros that are shaping Kaspa's price action, when this April event comes up with all these same events that we've used in real time to get out of the way before crashes happen, are going to happen. We read about those in official documents, not just on some social media post, that will complete the pattern and provide the ultimate discount opportunity. And very similar to the prior April crash down, it will have a quick recovery. So that's great. What we want is positions that are already showing gains. It makes it way easier to hold. So by DCAing into cash, waiting for this April event that's outlined in federal documents that the central bank's talking about, that we've proven works, we'll be able to get that ultimate low. So from that point forward, we'll use this same insight, this same strategy to continue to dollar cost average. What we've been doing throughout the cycle is using FOMC meetings. Now, recently, this has transitioned to FOMC minutes. You see, at the meetings, this is when everything was rock and roll. So we had that huge injection from the central banks when there was a possible bank run going on. Kaspa peaked out at like 5 cents, got on our radar. We hypothesized institutional investors were buying it. So we waited for the next FOMC meeting. We purchased Kaspa just under 2 cents, all in, because we were like, dude, there's some big players interested in this. Let's get Kaspa. At this FOMC meeting, it did a 10x. We actually captured that 10x leverage trade. This is when people were like, dude, you need to show me what an FOMC meeting is. You need to make a VIP group. So then we built a course. Look at this one. FOMC meeting, rockets. So we've been using a combination of technical analysis and macroeconomic insight to find out when Kaspa's lows are in and when we're going to purchase them. This dramatically extends the dollar, particularly with the repeating trend line and the repeating trend line system. You notice this downslope keeps happening over and over again. Someone, a Kaspa dev, actually was in our VIP group exclusively because they wanted to learn about the repeating trend line system and Kaspa's connection to macroeconomic. I heard that from my contact in the KII. We've been exchanging a lot of information. We're going to do a live stream with them. So yeah, that's how we DCA into Kaspa or anything. So right now, we've got these big plans for Kaspa. I'm selling a duplex out of state, and I'm going to jump it into Kaspa and top off my Bitcoin position as well for swing trades, because this document has the words artificial intelligence in it, and that's an FOMC document, just like with Zebek. When we got into Zebek super early, right? Zebek, February 18th. We put Zebek on the map. All right. I fed this research to our group. Our group members then broke it down. These guys are not slouches. They were able to put together Zebek. And then they start tweeting Zebek in everybody's comments. Now people are doing videos on Zebek. Breaks out. And now everybody's interested in Zebek. It's connected to tariffs. Right now, my side bag position is Clanker. And of course, this one I'm heavy in. Banker bot, I just had a position in, nothing big, because it's traded on a DEX. Who wants to load up a big position on a DEX? There's huge fees, no big deal. Same with River. Smaller position in River, it would have changed my life if I would have went long with a big position, just like $10,000, $20,000, or even like all in for my side bag on River. This did a 30x, dude. We put together multiple trading plans for that. Clanker right now, side bag because of AI. Also, Clanker is Banker Bot's launchpad. It's like Banker Bot's daddy. Very similar projects. Yes. Wojak. That's like the epic fable of all time. Hands down for Wojak. CC Canton. Oh, yeah, I have seen this. Polychain Capital right off the top. That's a quality VC. Privacy. Okay, privacy is a huge narrative. Oh, yeah, this is a new listing. Did we drop this inside the VIP group as a new listing idea? Is this on Coinbase? No, one of the group members showed me this, actually. Yeah, this project, huge market cap. 6 billion. What kind of exchanges do we have? You can get it on Kraken. Oh, this isn't a new listing. This was released in November. Very bullish. This is a cup and handle. Absolutely. See this beautiful rounded bottom? This is showing buyer or sellers are in control here. The buyers are taking over, and now there's a consolidation waiting for an upside. Yes, this looks bullish to me. Its next catalyst for upside could very well be PPI data. So at the December 30th FOMC minutes, this kind of front ran that. And it's been having a lot of downside. This is a PPI print, that producer tariff-based inflation. Since we are seeing direct downside out of PPI inflation, this coming Friday's a PPI inflation. In the event we can get something bullish here, rock and roll. Privacy has been a very popular narrative. I haven't found any connection in the FOMC documents, although I will say I wasn't reading them looking for a privacy connection. For anyone interested in Canton or the privacy network, you might want to read that as FOMC documents, run them through an artificial intelligence also, and be like, can you find any connection between privacy networks and any of the language the FOMC is using, and see if they can come up with anything for you. Good question. It came in neutral. Here's what ended up happening with the macroeconomic calendar. So the prior FOMC minutes was super bullish. So was the durable goods. Here's the thing. We had 2 in 1 coming out. They all just happened on Wednesday. So this event, which rocketed a ton of different projects, and this event, they all just happened together after a bullish CPI and jobs report on Wednesday. What ended up happening is this. The durable goods came in super neutral. So it's not just like durable goods, one number. There's a bunch of, there's transportation, defense. One of them showed a ton of growth, and then the other metric showed like crisis mode, like decline of growth. So that's a very mixed readout. Therefore, the institutional investors, they can't anticipate how the Fed will react to that data, and it comes in hardcore neutral. The durable goods was just flat out as neutral as you can come. And then in this FOMC minutes, it was also extremely neutral language, although they did put a lot of emphasis on inflation. We have this clip here, which is talking about every point where they mentioned inflation. We're waiting for inflation to get solved. Inflation's going to dictate everything. Therefore, we're assuming, okay, great. When PCE comes out, which just happened 24 hours ago, this will be bullish, and then this will give us our upside, and it came in bearish. The PCE inflation was high. So why hasn't the market crashed yet? And it might very well on Sunday at the open. We might be looking at a downside. I think it's going to be volatility into the PPI. I think it's just so neutral. There's so much conflicting prints that it's just going to be a delay. This is GDP. This is a quarterly quote. This is how the economy is doing in general. Is Powell's rate cuts plans actually gelling? They projected it would be growth. Guess what happened? It came in super bearish. And now this has got Powell worried about stagflation, which can, in return, force the Fed to stimulate, which institutional investors will front run. Yet there was just so much neutral data coming out, we didn't get a kickoff from it. So we'll be live streaming on Sunday for the DXY Open to see how institutional investors are processing that. Tibber, artificial intelligence, absolutely bullish for this entire cycle and the local market, because the Fed is putting artificial intelligence in the prior 2 FOMC documents. In the event we get any bullish upside at all from these recent events that just took place here, it will most likely be in the AI sectors, because the Fed's talking about AI. Therefore, institutional investors are going to front run into those positions before the growth actually happens. You can go that route. There's a lot of competition in the AI sector. I think what you're talking about is diversifying an entire portfolio of top 100 projects. Keep this in mind. The less projects you have, the better off you are, which is completely counterintuitive to the majority of narratives that you'll hear, because these guys are they don't have much to offer, so they're trying to sell you 100 different trade ideas. The less you have, the better. You'll know that chart better. You'll know the on-chain dynamics. You can DCA into cash more. In this course we're putting together to get everybody up to speed on all the vocab, what's going on with PPI, what's the difference between headline and core PCE inflation, how this all works from the get-go, not the M2, but the bond market. In that course, we're going to be underlining the concept that your majority portfolio is just like that savings account they taught you about in school, where you're going to get a 5% yield over 10 years. You become a millionaire, except for this is turbo. Turbo gains, tons of volatility. From using this macro insight, we can jump on that. So yeah, definitely bullish on Tau right now. Using some technical analysis, we can see the repeating trendline system. See this trend line here? Keeps repeating. We can actually bring in an angled Fibonacci pitch and get even more detail about where upcoming resistance and support is. That's not what this video is going to be about. We've been getting rejected across this Sunday at the DXY Open. In the event the institutional investors are favoring GDP loss over that high inflation PCE data, we get a breakout here on Tau. We cross this. It starts to get up to like 195. We might test the top of the support, but we're clear. We're good to go for some upside. There can very well be a local rally in Tau. For anyone interested in doing that, we'll be watching Tau on Sunday. So the way it works is we'll get everybody started, but Sunday ultimately rolls into Monday, the first 3 to 8 hours filled with information. According to what the Fed's projections are. So these aren't projections from Crypto Banter or any of these guys. According to the Fed, once tariff inflation is handled, then we'll start being able to move up to key resistance, which will get the altcoins rolling. First, they have to solve this liquidity crisis. This is the FOMC document that came out not 2 days ago, but 45 days ago on December 30th. It's spray painted the word April all over it. Because the government shut down, going back to an earlier document, reserves fell sharply on September 15th. And we can see that formed a double top on the altcoin market right before Morgan Stanley came in with their regulation. So that's September 15th, right? Liquidity gets drawn out because the Treasury General account, they're refilling. This happens again and again. The other time it happened was here. There was an FOMC meeting. The Fed says, we're going to halt quantitative tightening in December. Super bullish news. Everybody starts ramping in. Surprise, gotcha. Scott Bessant's piggy bank's going to get filled. This liquidity crisis causes downside, specifically in crypto, because crypto is very sensitive to banking liquidity. And that's going to happen again. We can see in these documents this April with a Bank of Japan carry trade hike. But after that, they'll start to handle inflation and, yeah, get some upside rocking for sure. Tau looking good, absolutely. Solid. Yes. And more importantly, Kaspa's really connected. Let me rephrase. Instead of saying more importantly, using this very specific macro hybrid style, which we've proven throughout this video, and in more detail, we're going to train you on how to be an expert in it. So not only can you hold a conversation with your uncle who works in Wall Street without him teasing you about your meme coin portfolio, you'll know what's going on, and you'll be able to, for one, understand these lock-in dates that we covered, and you'll understand how to count cards. Like, the count was favorably bullish heading into this FOMC meeting, durable goods and PCE print that just happened. Guess what? We didn't get lucky. Part of this strategy is you want to see the data first. How awesome would it be if we could walk into the casinos behind me and we get to see our cards and then bet? You can do that here. So there's no need to start positioning before and getting all greedy. Let the cards come down and then make your bet. They're letting us do that. We just have to know the game, which is what our course is going to teach everybody. This is groundbreaking stuff. There's one other guy that teaches this. Trader's Reality. Surprisingly, he's not from the United States, and he's an expert in the United States economy. Kaspa is capturing the Bitcoin store of value here. Look at what happened when they injected long-term bond money into the markets. This is their big plan. This is Satoshi's design. You see this is a 4-year cycle. It's got nothing to do with Bitcoin. This is the central bank fiat mastermind plan. Just like Mike Tyson said, everybody's got a plan until they get punched in the face. So the red line is the Fed's plan. Every 4 years, they're flooding the economy with money, and then they're taking it out to fight inflation. The black line shows how it actually went down. So the Clinton administration, they had the best run. Because of lockdowns, this run has been super lame. And we can see that on that blue line on the total 3, right? On all those charts, we can see it. We had a bull run while the Fed is selling bonds, right? The Fed's like, come get your bonds. We'll pay you 5% a year. Give us your cash, taking cash out of the market. Very bearish. So as this black line starts to come back up, Kaspa, very connected with that. So super bullish on it. Long-term store of value. Yes, I think with your 10% altcoins, I think that will be more of an active timeline. So with your 60, 20, 10, these are that's your savings account. Like they tell you about in school, where you're going to be a millionaire if you save $1,000 a month and you get 5% interest in the bank, which is how these bonds work, which is how the entire market is shaped. As the Fed controls this action, they determine whether BlackRock and the big dogs are going to be buying crypto or they're going to be buying U.S. treasuries. Also, Scott Bessant, mastermind, they've now incorporated crypto and U.S. treasuries, which could be huge. We have no idea the monumental bull run that'll happen as this black line finally starts ramping up with everything that we've put in place. So these Bitcoin, Solana, these are part of your long-term savings. This is gold, I assume. 10% altcoins, 10% more brief-term holdings. Now, for brief-term holdings, I'm not talking about swing trading every 2 weeks, which you can do, and we cover some in our group and we'll cover in our course, but more in line with the Chad callouts that we've been covering in this video, right? We're reading the FOMC documents and we're seeing directly, okay, there's going to be a monster issue coming up here. It's going to crash. You're going to swing trade some of that bag, okay? Some of it you're holding till 2030. Some of it in your altcoins particularly, because they're going to be the most connected, the most volatile. You're not going to want to stick around when the Bank of Japan carry trade happens and tariffs are about to rock and roll. For example, on January 27th, doesn't matter what you're holding, you don't want to be holding it then. This is how crypto works. That's why with our long-term holding bag that we're going to go to 2030, it's going to go up so high in theory. So I would say that's a fine portfolio, absolutely. But instead of 10% altcoins, I'm going to say 10%, you're going to actively swing trade using the Chad dynamics that we've already used. We've already proven these work. This happened in real time. Planning to sell here, selling here, selling here, recognizing we're in trouble here. This might have been a human error, yet we were able to get the information out to our group members. Anyone could have solved it. We could have sold before any of the downside even happened. And we did all these other times. For whatever reason, we didn't get out even before that wick, but it could have been done. Could have been done. I'm trying to illustrate how effective all this stuff is so people will start to use these FOMC documents. There's so much misinformation floating around. It's ridiculous. But when you actually measure what worked and what didn't, there's this, and then there's everything else. In order for Kaspa to hit 50 cents, first, we've got to handle tariff inflation, and then we've got to crack normal inflation. Now, the Fed, in writing, is planning on that to go down in 2028, okay? So in order to get up to those levels, we're going to want to see that inflation level cracked. I'm just going to give it to you how it is. I'm not going to try to get you overly excited. This is, hey, good news. It'll give you longer time to save, get a bigger position in Kaspa. So when that rocket ship finally happens, for when that once in a 12-year perfect storm, when this black line actually starts to roll, you will be there. You will be there. And that's what our course is going to be all about. We've already got all the information inside our VIP group. It's like learn as you go. This is going to be from scratch, everything with printouts. Thank you for the compliment. I absolutely believe that's true. Make sure you guys hit the thumbs up button, engage with this video. Here's a cold hard fact. This was in the top 100 largest Patreon groups in all of social media. It earned more money than everything else. We charge the least amount to join our group. More people joined because we are dishing out this Chad level alpha over and over again, helping people crush the market time and time again, making these projections that worked out, like when Kaspa was going into the rate cuts because of the Bank of Japan liquidity crisis. Guess what? This is actually going to dump. What happened was everybody was in the Kaspa keyword. All the Peach Fuzz Mafia, Archie type, all these guys who are like known goofballs. They don't have a good strategy. We got to compare our style to theirs, and we just crushed them. So our group, like Crypto John, we'd be like, this is what Crypto John said. This is why we're right and he's wrong. Just over and over again. Our group rocketed. We're trying to get into bigger keywords, which will help Kaspa. So when we're doing a regular altcoin video, remember, we're going to be secretly plugging Kaspa, okay? For people that are just interested in crypto. And all that stuff can be applied to Kaspa in general. So, yeah, thanks for the support. That's one of our blackjack counting things. The Fed is assuming tariff inflation will be under control. Powell's going to get replaced, and they're going to have somebody who's more interested in growth. So with all these data coming in, right, like the durable goods, the FOMC minutes, the inflation, typically the central bank, or recently I should say, the central bank has been in crisis mode because of the massive printout. They're just trying to prevent stagflation. They're just trying to prevent an economic disaster where nobody has a job, the economy's in the slump, and inflation is high. When things get going good, See this black line running upward? This was the Clinton administration. Now, arguably, he got handed a great setup by the prior administration. I don't want to seem to be playing politics here. The Clinton administration completely crushed it. Anyone who was alive in the Clinton administration got super rich. That's why the boomers are so wealthy. 100%. Anything you invested in, rocketed. We're about to get into an attempt with Scott Bessent at the helm. Another one of those Clinton administration runs that can last through this administration into the next one. They're setting the play right now with tariffs, because what's going to happen, instead of changing policy for crisis to avoid a disaster, everything's going to be going good, and they're going to be changing policy to make it even better. And that is your perfect storm. That only happens once every 12 years. That's what we want to get ready for. Okay. And that's why it's so important that we're dollar cost averaging into a bank account of top 100 portfolio. You can go all in Kaspa, 70%, and then do 30% your active altcoin trading, where you're going to do all the Chad buying and selling. You can do some of that with your Kaspa holdings too. That's what we did back here when we were selling the top. Sell half of our Kaspa. We'll buy it back later, right? Keeping that bank account mindset, waiting for the perfect cycle, because it's coming. I can give you one that we've been talking about, which is Clanker. You guys remember virtuals when it absolutely rocketed to the upside? I remember before virtuals even gained any ground, somebody inside our VIP Discord was informing everybody about virtuals. I had to do one-on-one contacts with my group. We're one of the only VIP chat rooms where I do one-on-one with the guys inside Patreon. Everybody else, they charge more money for that. I had one of the biggest groups of all time. I chat with everybody. I like doing it. And also, I've got scouts, right? These guys get trained. They jump in. We have a course up. We're going to update the course. These guys are trained. They know what to look for. They know who's on first, what's on second. Boom. They're hitting me with information. The entire Bank of Japan in April thing, that came from you guys. Okay. So we also have the team, the think tank going on. That's why I always keep one-on-one open, because we've got more eyes and ears on the ground of guys that are trained. So this guy was trying to get everybody in on virtuals. And then suddenly virtuals absolutely skyrockets. We were able to get in pretty early, but not rock bottom like this guy in, not that high conviction level like this dude had. Right? Virtuals down here sponsored BitBoy crypto. You guys know the man who went insane after they stole his business? Through wallet tracking, I saw a video. He was paid by virtuals to promote it, and he sold what would have been 10, 25, some insane amount of money worth of virtuals, and then he dumped it into XRP before it even rocketed up. Clanker, in my opinion, is a great, huge upside trade that has strong standing power. River is one that we recently captured using FOMC documents. The last FOMC minutes gave a lot more insight, because the minutes is based on the meeting that just happened. At the December 30th minutes, the meeting 2 weeks before, Powell was talking a lot more. He gave a ton more insight. He's like, yeah, because of the government shutdown, this liquidity that's all really stressed out, like we've been showing inside here, right? The reserves, because the reserves are so crashed out, we're going to start buying treasury bills. And so therefore, we know with the flywheel effect, this is going to impact River, which is a stable coin T-bill project. This thing went ripping to the upside. I wish that this was on main exchanges because it was on a DEX. I only got a small position in it, but this thing just went mind-blowing. It was like a 30x. You could have even gotten more. You could have gotten like, this is like one of the best swing trades of the year, of the cycle. Using this strategy, the same strategy we use for Zebek, we're getting insight from the minutes. In here, I'm not going to bring it up, but it says artificial intelligence 100 times. Therefore, Clanker. Clanker looks pretty appetizing. It's on Coinbase. There's a lot of other reasons behind it. And we have other rocket picks inside VIP. And as the FOMC minute documents come out, we'll get more. This is like an ongoing thing. So we're always using this skill set, bouncing it off. You want a group of people around you to bounce ideas upon. I'm part of a trading group downstairs with money market managers, a guy who owns an exchange overseas, etc. Telecoin, this was part of our original Zebek trading plan back in February 18th. Because those documents, the FOMC minutes, they were saying, hey, tariff, tariff, tariff. We knew our swing trades will be tariff because we are front running the institutional traders here. There's all these guys that are like, oh yeah, we're going to front run Alex Becker or the biggest guy on Twitter. Lame. This is way better. Yeah, there's been talks of Kaspa becoming an ETF. It's in the infancy stages right now because Kaspa doesn't do anything yet. That's super bullish. It's been in the top 100 for a long time. It's been there for a long time, and I can't wait to see how high it goes once it actually has smart contracts and the KII starts building. Diving into this entire rabbit hole definitely has something to do with macroeconomics. We've been seeing AI all over the place. Clanker to virtuals, the big difference, virtuals does a lot of chatbots. Also, remember that May 15th resistance line that we just went over on Kaspa that the Fed was talking about? It's also on virtuals. It's on pretty much every top 100 chart. May 15th, when the Fed had their issue with inflation, that's when it all started. We got so much tabs opens, I can't even find that one. Okay, so Clanker, virtuals, and then virtuals, banker bot. The team behind Clanker is Farcaster. Farcaster worked on Coinbase way back in the OG days of crypto. They then branched off to do their own thing. BankerBot was launched from Clanker. The VC is Coinbase. One of the big differences between Clanker and BankerBot is that Clanker has verified smart contracts officially audited. Okay, that's going to help institutional level investors. Meanwhile, on BankerBot, they're just forking that. BankerBot, in my opinion, is front-running Clanker. And the Claude.atg.eth, this could be the next, like the virtuals meme coins that went flying, AIXGT. Did I pronounce that right? In the virtuals ecosystem. It can be the next what we've been seeing recently. So we track new listings using CryptoRank. It's like there's a fee to do so, but we'll get a lot of intel. Like we were able to drop a new listing heads up on Aztec recently. This aligned with a lot of narratives that have been bullish recently. So this was something that we were like, hey, this is a new Coinbase listing that's aligning with a ton of bullish narratives. And just recently, yeah, it bounced to the upside. Now we're projecting, we'll have our eye on this on Sunday when the DXY reopens, because originally our trading plan for this was we're going to get a bullish durable goods, a bullish FOMC minutes, and then we're going to sell it at the PPI before February 27th. Been very bearish recently. Now the economists are thinking that's going to be a bullish event. That's what they're anticipating. So in the event those numbers come in, low inflation on PPI, that's low tariff inflation, this gets another leg up, and then we can sell it for a rapid action swing trade, create a moon bag, better profit-taking round. But back to the question at hand. What's been coming out again and again, day over day, is AI agents with a lobster or crab theme. Elon Musk even did a tweet, Claude bot. The difference between these Claude agents and any other virtuals agents is that these Claude agents can actually do a transaction on a wallet. Okay? AIXBT. That was the ticker I'm looking for. So this was one of Virtual's best chatbots, right? Had a huge run. This chart doesn't really show the prequel, but of course this started super low and then rocketed to the upside. We can get a better shot of this on Dex Screener. So these Virtual's chatbots, that's one thing. What Clanker's doing, yeah, we're still getting only half the chart there. What Clanker's doing that's different is these can do automated transactions on a wallet. They can execute smart contracts way better. Virtuals has a bunch of parlor tricks. They can chat, they can talk with you, they can read chats, do research, compile language. Pretty impressive. This is a whole different animal. So what Claude.atg.eth can do that the Virtuals bots can't do, let's say that there's a hurricane in Florida. They need to get water bottles from Dallas, Texas. It can find the trucking bay. It can find the map. It can put the money up to pay the driver. It can get the water bottles. It can actually get that already before everybody dehydrates. So it has real world commercial application going in line with the Morgan Stanley regulation. Plus Clanker, super profitable. Clanker and BankerBot, they made Grok a millionaire doing some kind of trading. So very similar to our Discord member who was insanely bullish on Virtuals back here when BitBoy Crypto was trading his Virtuals. Then he got sponsored by these guys. And then he just goes, yeah, thanks for the sponsorship. I'm going to sell all my Virtuals for like XRP or something. And he missed out on like a $10, $25 million bag. Thinking Clanker, with its automation, has a great chance of seeing a really high market cap. We're in a bear market, and it's been doing a lot of volatility. You can buy Clanker on Coinbase. Remember, the Farcaster guys used to work at Coinbase, all right? The Farcaster guys were employees at Coinbase way back in the day. So they got their Coinbase listing, and you can leverage trade it on Binance. Coinbase. You can also buy this on Kraken. I do not like buying on DEXs. If something seems bullish, but it's only traded on a DEX, I always do just a very controlled position. DEXs have a lot more of these FOMC events that can create catastrophic downsize. So you want it to be traded on at least like a Kraken exchange or better to load up on positions. Ideally, Coinbase. So this is also a Binance Alpha project. Just to touch base on this quickly, this is huge for recent new listings. Since CZ got out of jail, Binance Alpha is where all the hot projects is going to be. This is an exchange that's considering projects for the Binance main exchange, but institutional market makers, those type, they're loading up in this Binance Alpha exchange for their own market maker type positions. So yeah, you can get banker right on Coinbase, bro. That's one of the reasons why we're so bullish on it. So here's the difference. Farcaster, they worked for Coinbase. When we go over to BankerBot, we can see also listed on Coinbase, Coinbase Ventures and Base. Okay. And these two projects, they're very connected. The main ones, as we've been explaining, are tariff inflation and then just regular inflation, setting up that 12%, or excuse me, that 12-cent resistance that we can see. This is quoted from the FOMC minutes. With the effect of higher inflation or expected inflation will tone down by the middle of this year. On May 15th, inside our VIP trading group, we were able to get out of Kaspa and all of our positions while Powell had that meeting. This is the real-time call out. We're going into the details why we needed to sell right there. And of course, altcoins sold off further, and then we purchased at a discount. What that did was, you can see it on virtuals, Kaspa, everything. It created a resistance, and in order to crack it, we're going to have to get super low CPI and headline PCE inflation. Okay? And that's not my opinion. That's coming from the FOMC document. That's where I'm building my opinion from it. The Fed is saying, first, we need to get inflation low. It's that macro connection. And to get everybody up to speed on everything that we're saying, how CPI works, everything, and these are real-time call-outs, we've got the full upgraded course. We've already got a great course. It's learn as you go, as these events happen. It's going to cover it all. And it'll be video and, most importantly, written format. So when a PPI data is coming up like Friday, you just flip through PPI. You know all about PPI. You see some historic events where we traded PPI, how it works, how it incorporates to everything else. Very interesting. Very interesting. Yeah, getting into some technical analysis on Kaspa. We can see this on Tau, on a ton of different projects. We see these trend lines that will repeat themselves. It's just the exact same angle, just happening over and over again. And you can take a Fibonacci pitch, add it to it, and get a ton of insight. We've used this in combination to our hybrid theory a lot with Kaspa. We can see these trend lines here. Pulling over our Fibonacci angled, this is the deep end of what we call the origin trend line. It's also known as the repeating trend line theory. When we first started coming up with this, people thought we were goofy. Jareth Soloway, who's like the top technical analysis guy in the world. He does stocks, he does Bitcoin, he does precious metals. He uses repeating trend lines. So there, haha. You can see as we really zoom in here, the angled Fibonacci is like very incorporated. If we could get into the 2 hour here, it's even closer to like resistance, stop and go. Right? Like here is the FOMC minute stop, massive resistance here. We get into the red zone, there's a breakout. Okay. Using that exact same Fibonacci repeating, we're going to zoom in here. And of course, these align to different macroeconomic events. That's how it's all put together. There's that repeating trend line. We hit the golden pocket, tons of resistance. We hit this repeating trend line, more resistance. As we get farther away from the golden pocket and this cluster, theoretically, this is where we can get more upside. So this is when tariff inflation starts to get solved, etc. And we get more room to go because there's less resistance, combining a technical factor with our macro theory. That's hybrids. That's hybrids for you. Yes, patience, huge. 45 days, 90-day window. It's 45 days between every FOMC meeting. It can take 90 days to catch the environment we're looking for to get a good swing trade entry. Right, Kaspa's not listed on any major exchanges, yet it still holds its ground in the top 100. One of my theories on that, after VProgs, after smart contracts, once Kaspa gets a DeFi ecosystem, one of those projects will have a big enough profit margin to pay for, because it costs money to get listed on Coinbase. That's why they have meme coins on there. They'll be able to pay for Kaspa and their DeFi project to be listed on Kaspa. That's one of my theories. Solana's definitely incorporated into the altcoin market, and it's just recently hit a macro and technical downside. A couple of weeks ago when it was at $100, everybody was like, oh, should we scoop it up? And we were like, no, wait. It's going to bounce off of, it's going to fall down to this repeating trend line. That'll be the average of a head and shoulders pattern, does a 70% downside. So we're talking like 250, average downside 70, minus 70%. And then this, that's an FOMC minutes document filled with really good news. So that's like where the institutional investors that we're trying to copy trade, we're emulating, we want to get in with them. They front run the market. The thing is, by the time you hear about M2, by the time you hear about the Clarity Act, will have already happened behind the scenes. The institutional investors will have used these FOMC events to get their positions, and we'll be right next to them. Remember, you don't have to anticipate it like we were doing earlier this week. We were like, get ready. You know, we've got the count and it looks pretty bullish. You can always wait. You can see all the cards. See where the data is and then take your bet. It's totally different than Vegas. You don't front run anything. You let it all come out and then make your decision. So Sunday is the DXY opens, and then with the PPI this Friday should be more upside here on Solana. We could come back down and retest this low. Who knows? We'll find out. Very neutral print. Hasn't given us a ton of insight. That's something that we cover in our already existing VIP course, is we want to see projects, especially layer one chains, incorporated into the broader world of DeFi. And that's undoubtedly been enhanced with this MSCI regulation. They want to see projects that earn money. They want to move crypto away from the self-licking ice cream cone. They want to see projects that are a real world business that's using blockchain technology to deliver a better product. Yes, absolutely. We think, welcome back. I remember your emoji. According to the federal documents, and we just covered this, in order to get back to 12 cents, the FOMC wants to see CPI and headline PCE inflation get under control. Remember that May 15th event? Super Chad move. Powell came out. He said, we're going to change the inflation policy. And inside these FOMC documents, starting way back in January, when we sold the top, the Fed says this, and this is all about tariffs, which is answering your question. The US election is going to impact data. What it said moving forward is inflation. Inflation's going to crash everything. Inflation's going to be the world of bad news. So here's the Bank of Japan carry trade. Here's the issues with the new administration and their inflation causing downside. Using the FOMC documents, we're able to get out of the way before. This is showing, yeah, we've been anticipating this for months. The Bank of Japan, plus look out, inflation because of tariffs, it's going to cause downside. Powell came out and he did that May 15th event here. That set a hard line on virtuals, on Tau. May 15th. See that? Virtuals. Massive resistance. May 15th. It's that price level. So in order for any altcoin, Kaspa to virtuals to Tau, to surpass the May 15th level, according to the Fed, my interpretation of the Fed is pretty much in plain English, with the effect of higher tariffs and their effect on inflation, that will start to go down by summertime. And they have another quote. Participants generally expect that the effect of tariffs will diminish this year. So the first step is CPI and headline PCE comes down, then we'll be able to retake May 15th. Then we need to start getting into cutting down on normal inflation. That's core PCE. That will start to project Kaspa back up towards all-time highs. That's one of these things that isn't locked in, like the TGA drawdowns, the Bank of Japan rate hike. This is in the air, and we can kind of count cards using macro data. We can evaluate how likely it is, and the economists will do that for us. For 2026, best case scenario, they crush inflation and their 2028 projection to get PCE down to 2%. Let's say they start fast forwarding that, because it used to be 2027. They only recently changed it. Let's say they start saying, hey, PCE is looking good. We think we're going to hit it in 2027, like best case scenario, 16 to 30. What we're really building up for here on Kaspa and our top 100 projects is this big liquidity cycle dump, the perfect storm that only happens every 10 to 12 years. And it's all when the economy is in a growth phase stimulated. This is the 4-year liquidity cycle of fiat. When Satoshi built Bitcoin, he mimicked that 4-year cycle, creating a technology, a currency that absorbs this liquidity, thus propelling it forward. And we're waiting for that perfect storm. By 2030, Kaspa can go like super, we actually have Lambos. Like you actually have a Lambo and a huge pile of cash because you stuck with it and kept DCAing. My outlook is hopefully it will stay down longer. There'll be some issue with tariffs that keeps inflation held down so we can just buy more, because it's only a matter of time before they fix the economy and they finally get this perfect storm. So these prices, super awesome. Super awesome, because you got to have that wide mind frame. You got to really understand what Satoshi was doing with this and the connections to macroeconomics. Yeah. Absolutely a good project. Can definitely do well. This project ultimately has a lot of positions in other projects. It's kind of a portfolio of a ton of different crypto assets. What's even at a lower valuation that holds crypto assets is crypto stocks right now. I know we all like investing on the blockchain, but even just Coinbase stock, micro strategies, Bitmine immersions, the arbitrage there is so low because of Morgan Stanley. But yeah, this is been having some downside because of PPI. Okay, January 26th, a lot of downside. December 30th with that FOMC minutes, it got some upside. So this coming Friday's PPI, this can be a breakout swing trade entry on this, or if that PPI comes in high inflation, that can give you a discount. So let's say you're sitting on $2,000, you want this project or any project. You can see the cards come out first. Okay, you just wake up at 5:30 in the morning with the rest of our VIP group. We look at the PPI data and it will tell us. We have like an insane accuracy once the card comes down on calling market sentiment and then connecting that to a specific project. This is fine. Definitely connects with recent market language, with the FOMC minutes. So yeah. Absolutely, guys. Smash the like button, subscribe, tell your friends, drop the channel link or the channel name in the comment sections. This will naturally get us up and running. The Kaspa keyword, we kind of crushed it, but we are looking to get into the regular altcoin keywords in social media. We can bring other traders into the Kaspa community and go over all of this data and how it affects other specific altcoins. Today, especially in the first 20 minutes, we did a very Kaspa specific breakdown, but all this data, this FOMC minutes, can be correlated specifically for any altcoin or any altcoin sector to give us more accurate insight, just like we did inside our VIP group with BankerBot or some of the other swing trades. All right, guys, thank you so much for checking out this video. We'll be doing more live streams. We're going to get the window tinted in the back, and then we're going to start doing live streams daily. It's going to be super awesome. So get ready for the Bank of Japan carry trade, the Treasury General account, where Scott Bessent is going to withdraw a ton of money from the TGA. According to the central bank. That should, based on all the data we put together in today's video, be a market bottom for broader altcoins, Bitcoin, and specifically Kaspa. In the meantime, there might be some breakouts in the artificial intelligence sector. We'll know more on Sunday. A lot of the data has been very neutral. Awesome. Thanks for checking this one out, guys. We'll catch you on the next one.
Public's out there throwing darts at the board, sport. I don't throw darts at a board. I bet on sure things.